Tariffs, taxes, and interest rates. How do these three items affect the real estate market moving into 2025? And how does the Republican Party play a role on what's happening in the real estate market as we move into 2025? These are the big questions that everybody's asking right now that we have our new leadership in the Republican Party, and now our new candidate takes office in January 2025. How does this affect the economy? How does this affect you as an investor? And how can we position ourselves to be able to strategically go out there and take down real estate investments? But first, let's learn a little bit about these three items, and I'll explain to you guys the real estate market. One thing right now that we need to pay attention to is the tariffs. It's a big question that has come up time and time again. It's a big concern to investors. People are worried about the increase of inflation because of these tariffs. And what are tariffs and how do they affect the real estate market and our overall inflation to the economy? So for those of you guys that don't understand tariffs, it's basically a fee on imported goods. So any goods that are brought in overseas into the United States, any import that comes in, it gets charged a tariff. It's a fee that's charged to be able to bring those goods into the United States. And the goal of having these tariffs is to be able to position the United States for more manufacturing so that the goods and services that are produced right here in the United States are better priced than those that are coming in from overseas, making what we have here more affordable and making sure that it helps strengthen our economy and our local manufacturing and our local U.S. dollar. Now, when it comes in from overseas, what the goal is long term is to be able to have those goods and services be more expensive. So on China, they're proposing a 60% tariff on all goods brought in from China and 20% tariff on everybody else bringing goods in from all over the remainder of the United States. Now, why would they do this? It all has to do with manufacturing. So if you guys remember what happened with computer chips in automobiles during the pandemic, we weren't manufacturing enough computer chips right here in the United States to be able to manufacture our own automobiles. And so it really put a cusp on production, not just of automobiles, but computers, electronics, appliances, everything else that has computer chips in it, which everything in this day and age has computer chips in it. It really put a downward cusp on what we do as far as delivery of goods and services, and that created inflation. And so to prevent that, we want U.S. manufacturing to be as strong as it ever has been. So they're promoting it now for the long-term growth of the United States in manufacturing and distribution. And so that's the goal. Now, the Republicans have some work to do because there's going to be a balancing act, right? The U.S. Americans don't want to see inflation happen really quick. So we'll take a look, and one thing to pay attention to is when and how these tariffs get implemented over the course of the next 4 years. Hopefully slowly, strategically, and professionally, so that way there's a balance as far as inflation. So we've talked about tariffs. Let's talk about taxes, okay? One of the big things that the Trump administration is proposing is to alleviate the federal income taxes on overtime wages for employees. This is huge because I know for even my employees, they get upset because they'll go in, they work a 40-hour week, they make X amount of dollars. Then they go in and work an extra 10 or 15 hours that week, and they get taxed really hard on that overtime. And they go, well, why work overtime if I'm going to be taxed so hard on the overtime hours? And so it really puts a downward push on employees' desire to work overtime because they're getting taxed so hard. So I think it's ingenious to be able to alleviate taxes off of overtime hours. I know my employees will love it. I know your employees will love it. And I know you as an employee, if you're working a 9 to 5, will also love it. And so to take those taxes down on overtime will really motivate workers to be able to put in the time, work, and effort in working those hours, which will help in what's happening with production, labor, and everything here in the United States right now. The second thing that they want to do is take taxes away from tipped wages. So waiters and waitresses that are working, they won't get taxed on their wages when they're getting tipped. In prior years, just recently, over the last few years, they started taking taxes away from tipped wages and really taking away from our service professionals. They want to give that back to the service professionals, which I think is great. They also want to take away taxes from seniors over the age of 65. Those people have went out, worked their professional careers. They put in their time, their money, their efforts into paying their 941s, their social securities, their federal income taxes. They want to take the federal income taxes away from seniors. And so I think all of that stuff is great. Now, how they implement that, we want to watch, pay attention, and see how that actually gets implemented and taken into effect as we move into 2025. And third, last but not least, interest rates. This is a big topic of conversation, and it's really cusping the real estate market right now. And so we need to pay attention to how interest rates get affected. Now, Jerome Powell next year, and his term is gone. And so the Trump administration will replace Jerome Powell, and it'd be interesting to see who they appoint into the Federal Reserve and how this affects what we're seeing currently in the current market with interest rates and treasuries. And what most people don't realize is that it's not just interest rates that affect lending, it's also the treasuries. When treasuries go up, leverage goes down. The amount of money that banks are willing to lend you goes down, and the available capital to you as the end borrower also goes down, putting a downward pressure on real estate investments. So for large acquisitions, when we're going out, and that's the biggest thing that's affecting investors like myself right now. We have these big $50 million projects that are coming out, and where we were at one time getting 80% loan to cost or loan to value to be able to either finance an existing asset or a new asset, we're now getting closer to 52 to 55%, meaning that we have to come up with over $20+ million out of our own pocket or through investors to be able to come in and get that asset going. The only problem is that when treasuries are high and leverage is low, investors would rather put their money into the bond market because the bond market's almost a guaranteed return with very little to no risk compared to a real estate investment. So it's really hard to raise capital under the exact same circumstances. So leverage goes down, you have to raise more capital. The cost of capital costs you more. That capital is no longer available because those people investing that would normally invest with you know that real estate is being otherwise compromised. They take their money into a safer investment, put it in the bond market. So what needs to happen here is that treasuries needs to go down. Interest rates need to go down. When interest rates go down, values go back up in the real estate market. When values go back up, appraisals go back up, lending starts to soften, treasuries go back down, availability of capital from lenders goes back up. All of a sudden, bonds drop, investors enter back into the market. There's some working pieces, ladies and gentlemen, that need to happen this next year in the commercial real estate market in order to be able to balance out the market. But until that time comes, we have opportunity to buy assets at lower prices because with high interest rates means lower values. Lower values means better acquisition prices. Better acquisition prices means better purchases for long-term upward profits. But can you see the end result of those upward profits if you can take the test of time and invest today for those long-term profits tomorrow? This is where wealth is created, ladies and gentlemen. This is where investors really make money if they pay attention. So those of you guys that are sitting on the sidelines, you sideliners, wake up, because right now is the time to pay attention to purchases and learn how to underwrite commercial real estate and residential real estate. It doesn't matter if you're in the residential game. If you own over 4 rental homes, you're now in the commercial game. Your portfolio, if you have an excess of 5 units or more, is now considered a commercial asset purchase. So you could take that portfolio into the commercial market sector. So when you're looking at real estate, you're looking at real estate investing, right now, ladies and gentlemen, is a time to scale because prices are low. It's a time to purchase. Tomorrow, when treasuries go down, interest rates go down, values go back up, and the market and the floodgates open up, all investors will enter back into the market, including you. You'll be fighting over real estate again because we still have a housing shortage. We still have a real estate shortage. And there is one thing that we can bank on, ladies and gentlemen. The population is going to continue to increase. Housing is going to continue to be needed nationwide, at least in our lifetimes. And so from now till the end of our times is a great time to invest, not only in commercial real estate, but residential real estate. And so as we move into 2025, I want you guys to take into consideration everything that I'm talking about right now. Let's pay attention to tariffs. Let's pay attention to how they affect the market and how the Republicans do with taxes, corporate taxes, personal taxes, taxes for seniors, taxes on businesses, and taxes overall. And let's also pay attention to interest rates, treasuries, and how we move forward into 2025. These are great areas, ladies and gentlemen, for you to focus on as an investor. Strategically position yourself to watch, learn, invest, and continue making profits. Ladies and gentlemen, for more content just like this, click and subscribe to our YouTube channel. Pound that thumbs up button. If you're watching this on repeat, comment below, #repeat. Let me know your thoughts on the current state of the economy, how you're investing, and let us know below a little bit more about how you're going to position yourself in 2025 to take advantage of the current market and how we're leading into the current years. Thank you, God bless, and we'll see you next time.